The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
There we go. So we got some action finally out here that wasn't just a little higher on no volume. We actually had a bunch of volume come into the close yesterday, literally a ton of volume. Then this morning we had a very interesting action in the market. I passed it along in the den when I logged in around noon, but started seeing one of the biggest of the big caps out there, option market makers doing some unusual action, as they like to say, on infotainment, cable, financial infotainment, cable TV. And it was very weird. I haven't seen that in Apple, which is the stock I'm talking about. I just thought maybe it was an effort to get this thing ready for $150 for next Friday. Well, they took it 150, actually 148.43 today, and I don't know if they just ran all the stops or what. We talked earlier in this week how I thought it was rather stupid, and the skunky Mr. What's his name? Kramer.
Bring me the head of the false prophet, Jim Cramer.
Jim Cramer was flogging this stock like, he had a bet out on it. But it didn't make a lot of sense to me why this thing didn't get killed earlier in the week. Everybody kind of came to its aid as soon as that happened. But my guess is they were just hoping that they were going to be able to sell a few shares before this thing took a header. Lower. But, they had their, like Microsoft had their developer conference, and just nothing happened. It's trading 150.47, got to a high of 155.18, but very unusual to see market makers really aggressively selling calls this morning, probably because they figured this thing was going down $5 so that they'd be able to get out of those, and buying any puts that they could before they turned into real money on the downside. But they were very active at that. I added one more position in the daily newsletter on this action, just thinking that we were on the beginning of it. Actually, even into the close yesterday, I said, man, if there was any time to add to our short positions, this is it. And about, 3-4 hour trading hours early on this bounce today, but the turnaround has been rather spectacular. I have to say, especially when you look at the SMHs, man, these guys were pushing. Eventually, like a rubber band, you keep pulling on it, eventually it's going to snap. And of course, that's what we had in the SMHs at a high of 89.71, trading out at 85.89 now. One of the bigger names on Wall Street is Citron Research. They tend to be big shorters, although they tend to be long just as much as they're short. Came out and put a note out and said that, man, the casino is back in stocks like not Netflix, Nvidia and others. And it's pretty easy to describe that as exactly what it is. People were buying with no expectation other than the bigger fool theory. That is, this stock's gone up 30, 40, 50% in a matter of months, but it doesn't matter. It's going up, so I'm going to buy it. And that's almost always the sign of a bubble. In fact, in this morning's newsletter, I put all the standard things that happen in a bubble. Maybe I'll put that up later in the show. But again, you get, after you've been through a few of these, you start getting a real sense on the back of your neck when these bubbles, which are very tough to predict, and a lot of time don't give you any kind of significant warning, just snap. Now, about half the time, they just gap down and the risk reward's horrible, so you can't go after them. I thought that's what was going to happen, not the intraday reversal, although these are much better signals. We're going to get to the intraday reversals, of course, with Apple, Tesla, and some of the others out here. But it is a big day. We're going to have a lot of signals out here. Volume is 2.3 billion shares as we start the show. So remember, we had 2-3 days out there with 1.6 billion shares on the NYSE starting the show. This is significant, and the volume was okay in the morning, but it wasn't great. Again, I was looking for something like 5.5 billion shares up here at these highs to signal that we did have a valid breakout of these highs. To me, this all shows one thing, and that is that everything above about 2390 is a false breakout. That an 80% chance that we close below 2400 on the S&P a week from today. About a 70% chance that we get back down as low as 2360. So look for a volatile week. It's certainly my first impression before I saw what Apple did was that they were just going to move Apple down to 150. So I added another short, just thinking it would have a lot more bang for the buck, because it normally does when the markets pull back. The exits on this one are extremely thin, but it also has a nice run to it. We'll talk about that maybe in a couple of weeks. We'll see how that trade does, but why I like that trade in the exact setup we have. But, we're 24.29 on the S&P cash, which we're off 4 points, no big deal. But this is the second day of a major reversal intraday. We had one yesterday. They had to buy it at the close. My guess is you're not going to have anybody buying this at the close. We have the Fed Tuesday and Wednesday, and I think, my initial reaction this morning, all this options action on Apple, where everything was starting to move already, I thought, okay, they're just getting ready to move all this stuff down in front of the Fed. But these are some major, huge failures, especially like in the SMHs. And when you have everybody, I had people asking me, emailing me this morning, if they could buy the SMHs. And I thought, okay, I got short them a little early, but I'm on the positive side of that trade now, so I'm pretty happy. Anyway, we'll get back with a little bit of history, but I think we sell all the way probably through the Fed now, which is Wednesday at 2 p.m. So we'll take a look. Somewhere between probably 40 and 80 points lower in the S&P cash a week from today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
That it's all just a little bit of history repeating.
On this day in 1752, Benjamin Franklin flies a kite during a thunderstorm and collects a charge in a Leyden jar when the kite is struck by lightning, enabling him to demonstrate the electrical nature of lightning. Franklin became interested in electricity in the mid-1740s, a time when much is still unknown on the topic. He spent almost a decade conducting electrical experiments. He coined a number of terms used today, including battery, conductor, electrician. He also invented the lightning rod used to protect buildings and ships, and many other things. I saw the original document that was in the Royal, what is it? Name of that? Royal, the Royal Society of Science in London, and it's quite an interesting document. I think you can find it on the web, but I went in there and they were having a little display of a lot of the stuff that they had for the Royal Society, which is goes back to the greatest of all times of scientists were in it, starting in the 1500s. But interesting to see the document because basically he's got a little nail where he tied the kite onto it in his house and let go of it. He said, "Don't hold on to the string." He was apparently smart enough already to know that if it hit and came down the string, he'd get zapped. So he was a little smarter than I think this makes him out to be. But the little drawings and everything are almost comical, little kind of like lightning bolts coming out of your head with kind of a today we draw a big circle with a slash through it. That's kind of the he had kind of the 1750s equivalent of that. Very interesting, but he was hiding inside the house, and the notes down there basically say, do not hang on to the string, hide inside, do not go outside, just cut the string and find the kite later. Don't go outside. It was pretty interesting. On this day in 1952, let's get back to the market, which is in progress as we speak. Okay, so what's going on here? We'll start looking at some of these. And the first thing we have is a question from the show from James. And James does not say where he is from, so I'm assuming he's from Lutz, Florida. What is my take on AAOI? Well, you certainly have the first move down with energy. These optoelectronic laser company, fiber optic laser company things have a long history in the past of boom and doom. I would watch them very closely. It's feast and famine. These things can go to the moon. They did in 2000. They did several times in the past. When everybody's adding additional bandwidth in the world, these things go to the moon because they make money out the wazoo. But when that gets cut off, man, these things fall back to earth, and many of them go bankrupt very quickly. This one is back to the gap up on the 22nd of May, did so on 6.7 million shares. You got 3 million shares, so not the end of the world out here. For me, though, I would think that this thing has the ability to get back to $40 for the end of the summer. I would like that thing to be back down there on light volume, maybe the end of the summer. I think this is a summer of selling. So don't look for any bulls on this show for a while. I'd have to have something truly prove me wrong after today's action. Again, today's probably just the first shoe dropping. There'll be mo shoes anytime soon. What else is going on out here? Well, we looked at that for James. I'm going to wait for some huge pullbacks in this one. And I think you could go back to 40 and still not bust the bull case in that stock. But you want it back down there on light volumes. We talked at the very opening about Apple, so we'll see how this chart looks. What are we trading out here now for Mr. Apple? 149.82. Now this one, as I said, man, this was, I think I said something when the stock was about 153 when I came in around noon into the Tiger's Den. And I said, man, these guys, they were lining this thing up in the morning. They had already figured out that they were taking this thing down. And I haven't seen any news. If anybody's got any, they can email me at path@tfnn.com or post it in the den or call me at 877-927-6648. Got down 148.43. But man, you wiped out pretty much all the traders back to the last movement up in this, which was on 49 million shares on the 8th of May. You're down today on 34 million shares. So my guess is you're going to be able to match that volume. I think we're going to have a fairly decent day down. And the question is whether or not anybody wants to hang on to these going into a weekend and the Fed meeting with, I would say, an 80 to 90% chance the Fed continues exactly the way that they were. They've already said that they are very concerned about the equity price appreciation in the last few months. And I think they're going to be vociferously vocal. I went the extra mile on that. Vociferously vocal about asset price inflation, or as Mr. Greeny said back in the 90s, irrational exuberance. I wonder if she uses that same word again. I doubt it. Anyway, 2.4 billion shares, Mr. Sagan. And we'll see how things go. But we're going to have a big reversal on big volume. Some of the other stocks out here that gave you kind of a pop and drop were Tesla this morning. I was thinking about shorting this thing, and by the time I could have clicked and got an email out, it had already reversed and headed down lower once I got the signal. And I'm not going to go chase something $14 down on a day or $16 down on a day or even more. But you got a big day out here. There's some more competition. Again, this is a stock that I said, I think there were several of them that just didn't make any sense, that the headlines didn't make any sense, that the propaganda from Wall Street weasels and skunks didn't make any sense. And that was how them spending $20 billion on new factories made this stock even go higher. At some point, you got to make your money back. And why they may be the only real car in the ball game, I'm going to say within probably a year or 2 years, we're going to have so many electric vehicles around, we're not going to be able to see straight. And if I didn't get to see the rig count, if anybody has it in the den, can they post it? I was busy watching the market. What did we have for oil? It's up 27 cents, not much. But I'll look for that rig count during the break. Yeah, we'll look at Microsoft. We'll look at some of the other ones. But yeah, the pretty big deal. And yes, yesterday I did say it. Talk about what I did say yesterday, today, again.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're going to go back and head back to Apple because somebody found the news article and what's going on with Apple out here. As I said, I was watching this from 9:45 on, and I found it extremely interesting that these guys were all over this, trying to sell calls early in the morning and trying to blow them out. That made me think these guys thought that that was free money. So somebody knew something was going on. And of course, they were buying back calls, which would have exploded in price and has moved down. So I just figured that it was kind of an options thing. It was coming back down to 150. Maybe they made up the story and fed it out to the magazines themselves. But the story comes up that the reason it dived, at least why these guys are saying it dived, was that they are using a modem chip that both Intel and Qualcomm are going to produce. Now, I brought this up before, but if you're an electronic manufacturer the size of Apple, you can't depend on a single company giving you everything they need. If there's a fire at one plant, you can't be out of business. You got billions and billions of dollars to ship every month. So what they'll do is they'll always make sure that there's a second source. Even if the design is from Qualcomm, they will make Qualcomm have Intel license the product, and Intel will just manufacture it. Maybe at just 1/4 of the volume, but Intel has to be ready to come up, and they'll sign contracts that they can make up the entire difference if need be. Sometimes Apple goes 3-4 deep on some parts if the company is small. So you always want to have multiple sources of a product so you're not stuck. Some places almost impossible to get that done, like the screens from Samsung that Apple uses. There is no real second source other than what they'll do is they'll have Samsung have separate plants and demand that they have separate supply chains from each other. So, yeah, and generally they'll be in different parts of the country, so one earthquake doesn't destroy them all. I think everybody kind of remembers us talking, I think it was in about 2012, when the tsunami came and washed out all of Seagate and Qualcomm's 3.5-inch disk production, and the stocks really started taking off because there was a lack of supply, and they could start gaining more, adding higher prices to what was going on. Kind of the same thing. Anyway, the deal is that Apple is using an older design with T-Mobile and others advertising new almost gigabit speeds for their phones. And at least the article intimates that maybe Samsung and others are going to be using the Avago licensed chip, although I think it's made by Samsung, and it may have a Samsung name on it, but I think they license the technology from Avago, if I'm not mistaken. I'll have to do some more research this weekend. And that is basically what you're finding out is that Samsung and probably T-Mobile go, well, if you buy a phone from us, a Samsung phone, you're going to get gigabit download speeds. And Apple, maybe half that or something like that. I can imagine that the ads are going to be there. The reality will probably not be that great. It will be more like, well, they shut me down. They lowered my speeds. They did everything but supply me gigabit speeds. But in telecommunications, it's all about what you say. You pay the fines later. And I think that's what everybody traditionally just thinks. Let's take a quick look at Qualcomm and then Avago. Not so much a move in Qualcomm, although down a little bit on light volume. Of course, those two, Apple and Qualcomm, have been at each other's throat. The one I think they're talking about using is Avago, but it's down too, and kind of just as bad, really. So I don't know, not as much as volume. So again, who's using who is kind of a secret. Until you get the phone, you never really know. So I'll have to go through these over the weekend, but none of these look great. But we'll see. Maybe Samsung's got their own chip, and Avago and Qualcomm are all out in the rain. But we'll have to see. This, of course, at the same time we had the semis moving down, and that was, of course, a lot of the supply chain in Apple. And as we've been talking throughout the first 6 months, there's been a lot of talk about Apple not being able to get their phone out for the third quarter, and that it would actually be in the fourth quarter, maybe a couple weeks before Christmas. And that would be a huge blow to the sales for Apple also. And that's been going around for a while, especially through the Taiwanese semiconductor space where a lot of these chips are made. Apple keeps on rolling back when they'll have the designs ready and when they'll be able to do something. And, the first run on Apple is 50 million chips. I mean, if you got one chip in an Apple new iPhone, their first run is just going to be 50 million units. So you got to be able to make 50 million chips just for the first rollout on it. So again, especially some of these smaller companies are all going to the same big fabs like Taiwan Semiconductor or Global Foundries. And these guys have kind of a limit also in that. And when everybody decides to be a fabless manufacturer, i.e. they don't make their own chips, they just design them and then take them to Global Foundries or Taiwan Semiconductor, it can be a big problem. Okay, let's take a quick look back here at the markets again. Okay, we've headed south, 2426 on the S&P cash. And since it's been, I think since a long time, we will do it. Somebody's asked me to play something. I'll play it as soon as I find it during the next break. Okay, what else are we looking at here? Let's take a quick look at Microsoft MSFT. Wow, this is ugly. I've been thinking that this is coming back to 66 the last couple of days, and certainly you don't have the volume quite today, but you certainly have the move. It's 25 million shares. At least matches already yesterday's volume. And what do you have here at the top? The best day you had was 33 million shares at the highs. But these stocks were just hanging out here like a big fastball. And, man, you just never know what that last blade of straw is going to do that breaks the camel's back. Microsoft certainly has that 6650, I think, in it. Today looks like the confirmation on it. We've been talking about it for a while. So what else do we have? 2425, 2.5 billion shares. And if we get any kind of volume at the end, this will be a big volume day down compared to some very light volume days and very light dollar days overall. And again, these markets that have no short interest, we'll show this to you when we come back, are the most dangerous because there aren't a lot of shorts to buy down move. We'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Dive. And we're at the low of the day, 24.25 on the S&P cash volume. Continues to rock the Casbah. 2.55 billion shares as we speak. And of course, on a Friday, we're going to have some fairly decent volume, which is rather surprising. But again, the last couple of days, I've been kind of telling everybody a variety of things. One, that the hurricane season has started not only down in Florida, but in the market. Brittle markets, you never know exactly what's going to cause the downfall, but you do know that they are brittle. You know by the way that they go up on no volume. And, of course, as I like to say, and didn't know for a while, let me put it this way. I didn't have evidence for a while, but I'd always looked at these. I always kind of knew that the markets really cracked hard. They can go up and down, but when they really crack hard is when there isn't a lot of short interest out here. And each day I actually look at, what the short activity is. In the S&P 500 and the NASDAQ, each day I look and make a average of all the short positions in them. Yesterday we had about 10% of all orders originating as a short sell. But if you actually go back, 20%, 25%, tend to be the days that you actually bottom. Everybody finally gets real bearish out here. And if you look back, what is it? Let me find it here. It was, it's a few more days. Here it is. The 9th of January, we had 30% that day, and that was it. We started moving up higher after that. And that's not uncommon. You'll see some huge day. Everybody gets bearish, and that's over. And the opposite is true, although it takes a while. And that is just even a week ago, we had 8% of every day. Now, one of the things you have to understand about shorting is that it is a daily occurrence for market makers because sometimes they want to keep the market moving. So they'll actually short a stock or and then buy back. Normally, they buy it back before the end of the day. They have, I think, up to 3 days to do it without actually claiming a holdover with the big cheeses that clear all the trades. But it's not uncommon to see these very low 8%, 7%, 5%. I think that's the lowest I've ever seen was 5 or 6%. In the last 8 or 10 years. But now that I have this stuff, I can go back and see it. Yesterday, mere 10%. And again, when we look back at January 9th, 30%. So you can see a lot of times when everybody decides that that they're the most bearish is the time kind of to buy, and when they're the most bullish and no one that's short has the guts to pull the trigger again is the time that you kind of top out. And a lot of times it'll go a week or two like that with no shorting, which is exactly what we've had now. If you have any questions, you can call me at 877-927-6648. And, of course, you can email me at path@tfnn.com. What do we have here? Anyway, it's not uncommon to see the kind of breaks that we've had today that just eat up a ton of money. And you know what? Guess what? Oh, we're off 12 points. It's not uncommon also to have all these people want to buy the dips. These guys that have been long are not going to change their tune tomorrow. They're going to buy this thing probably at 2,400 and they'll run it up 10 points. And if we've got a real bear market starting out here, that'll get sold fairly quickly. So watch for the very big spikes where the longs come in. And if they can't hold that, then that's it. Now, somebody asked me about what I was talking about in the options. So let me get this. It'll take me a second because I don't have this. My link got deleted somewhere along the way. So let me find this. Since I wrote it myself, I've got to go out there. Where is it at up here? There it is. Expiration smile. Bin debug. Expiration smile. And we'll show this. I had this in the newsletter yesterday, and that's why I was fairly confident about adding into yesterday's close and to this morning. What do you got? Give it a second here. A lot of calculations going on. Okay, here we go. So what do we have? 243.78 in the SPYs last night. This is the options crossover, and we can see that we're somewhere around 235 for the absolute maximum loss for both puts and calls. If it expires there, the most amount of money will be lost. We got a ton of money out there. So it behooves option market makers to push the market down into next Friday. This is one of the biggest moves that we're probably going to have in maybe 18 months. We haven't had that many. Last month, of course, everybody decided they had to rebuy it, but we did get that 40 or 50 point gap down, and then they just went back to buying and handling it. But I don't think we're going to get the buy this week. We go into Wednesday before there's any signal, and it's going to be kind of tough. So, are we going to get to 235 on the SPYs? I don't think so. But that does give us a range of maybe 80 points lower. And if you take that, that gets us to 2360. Could we go down there and tap that and then maybe rally on a Friday or something back up to 2380? I think we could. But somewhere around that 2360 makes me think that's kind of the target for next week. And if we get the rate hike, makes me think that that is certainly a doable thing. But yeah, just, somebody wanted to ask me if I had the NASDAQ shorts too, and I do. Even the NASDAQ yesterday was rather pitiful. It's not uncommon to see 25% in the NASDAQ. It's been a few weeks before we've had anybody really shorting it. Even yesterday, just 10% of the shares were short sales. And, 12, 13%. No one's wanted to really short the NASDAQ. Let's go back here for a while. I mean, it's like 14% was huge back in February. And again, this thing on the 9th, about 30%. And that was when everybody was extremely bearish. Now everybody's extremely bullish. But again, it's not uncommon to have a pullback with people bearish. But what you get when no one's bearish are sharp and fast pullbacks because, again, everybody's tired of shorting these things and getting bludgeoned. So when it does pull back, there aren't any there, and the market moves very quickly, kind of like Apple. We'll look at Apple's short interest when we come back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
He's got money coming out the wazoo.
What do we have?
Money out the wazoo.
Yes, if you're short, you might have the medical condition known as money out the wazoo today. What else do we have going on? Oh, I wanted to talk about how these things crack again. And that is, it's not uncommon to see exactly what happened here in Apple, too, which is everybody goes short on the 5th of this month. 22% of the shares sold were short. You get kind of 17-day and a 17-day, and then everybody kind of gives up. Yesterday, it was just 13% of the shares on Apple were short. And then the hammer comes down. So it's not uncommon to see a lot of people short at the highs and then start covering, and then the bearishness to wear off. And then when you move, of course, there just aren't that many people underneath to buy the big move to cover. So you know, if you've got both longs that want to buy and shorts that want to cover, you've got two sets of different people to buy and moderate any down move. When you see these big short position moves like you've seen in Apple and some of these other ones, it's because everybody is just out of the way, and there are no people. And it kind of reminds me of that movie where everybody's yelling, "Get back in there and sell! Get back in there, Mortimer! Get back in there and sell! Oh, I mean, get back there and buy! Turn the machines back on!" And you get a lot of that kind of scary kind of stuff going on. But we'll see. Anyway, we got an hour left to go. There isn't a lot of juice to the upside left. We did go and run a lot of stops down to 24.15, and man, did they run them. Man, just woo. One of the reasons why interday stops are just targets for the machines to come get you. But anyway, 24.20, 2.75 billion shares as we speak. Got an hour left to go. It's going to be very interesting how many people want to go into a weekend. Maybe they're sitting on some fairly decent positions they've had for a while. FOMC meeting, 95% chance they're going to raise rates. I'd say 95% chance that they don't do anything about the forward-looking part of it. And at the same time, they probably make a comment about how asset inflation is gone bonkers. So I can't think that there's a lot of scenarios out here that tell everybody what's going on. And there was a question in the email, do I think any of this thing has to do with the Brit election? Well, I think it does a little. All that cash kind of came here to the United States on the Brit exit because everybody thought that they were going to leave. I think there may be a lot of people trying to buy back in and selling the U.S. market right now, thinking that maybe there's a chance that they stay in the EU, so they want to get the cash over there fairly quickly. That could be part of it. But, I mean, this market was set up for a big drop or a sharp drop, as we've seen today, and in many of these NASDAQ stocks, just because of the irrational exuberance of its players. So what else do we have out here? Anyway, just watch for these stocks with low short interest. Give me a call at 877-927-6648. So what else do we have going on? Okay. So we want to look at a few other stocks. Take a look at Amazon. It got to its $1,000 target. Has it turned tail and run? Oh, there's a bad tick certainly in this one. I don't think that 927 is real. Maybe somebody can tell me in Amazon. My guess is that is a bad tick. Maybe that bad tick was used to run the shorts. I mean, to run the stops down below a few minutes ago. Don't know. I'll have to check the time of sales tonight. Even if you just look at it out here, you got about 10 trading days wiped out with today's action. Oh boy, we'll be back after this.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.